banking, cement, beer and other enterprises with large sums of money. In just 4 months, 5 foreign institutions directly or indirectly invested in domestic cement-listed companies. However, to some extent, the influx of foreign financial capital, foreign financial institutions will also play a role of catfish effect, accelerating the process of China's financial reform, stimulating Chinese people's original investment awareness, indifference and numbness of the financial concept. Secondly, the currency position difference is too large. The price of a country's currency, also known as the exchange rate, is actually all domestic goods compared to US dollar assets. RMB assets undoubtedly have huge room for appreciation and speculation due to their total bid price. The essence of financial transactions is speculation, and places with stories will naturally attract international financial speculators. The consistent expectation or premeditation of RMB appreciation has caused excess global liquidity to accumulate in China on the one hand, settling on physical assets and resources such as real estate and stock market, triggering various RMB asset protection in China war. On the other hand, the excess funds are driving the innovation and development of financial derivatives such as stock index futures, options, commodity futures, etc., causing China's virtual economy and real economy to grow dually separate, because only through the development of financial derivatives can the connection with the domestic real economy be blocked, creating a space for international speculators to freely speculate and allowing excess currency to evaporate as much as possible, such as the rapidly developing derivatives market in the City of London after the financial bomb. May it avoid domestic real resources being hijacked by international financial capital. The anti-Japanese war itself and the development of the virtual economy mean that China is being pushed into the era of financial civilization by international speculators. Thirdly, the complexity of China's financial sector is very high. This complexity is mainly reflected in different types of A shares, B shares, H shares, etc. Parallel coexistence of stocks and their corresponding rules. Staggered operation of various investment mechanisms such as QFII and QDII. It may even form a coexistence pattern of multiple financial centers such as Hong Kong and Shanghai. However, on the one hand, simpler things are less prone to errors, and more complex things are more likely to have vulnerabilities, which are easily exploited. At present, there is still a long way to go before the game rules in all aspects of China's financial sector are in place. The improvement of the game rules in the stock market itself and the establishment of rules in other financial markets, including futures, options, and other derivative markets, for listing. In 80% this situation undermines the balance between power and responsibility, thus making the political philosophy of the country the opposite of the trend. The main reason for domestic terrorist incidents to occur is the lack of national social and persona Responsibility matching refers to the contradiction and conflict of interests among the three parties being greater than harmony and consistency, and the destruction of this trinity relationship still stems from the division of interests and the imbalance between enjoying power and assuming responsibility. If national responsibility is still understood as unlimited joint and several responsibility for all actions, then as much hope as disappointment, national responsibility will be more manifested in providing and ensuring equal opportunities for individuals, and providing transfer payments to some vulnerable groups. In addition, the ability to provide normal channels and platforms for communication and exchange, so that fairness and justice can effectively play a role in handling unfair events, is also a requirement for national responsibility. Social responsibility is reflected in providing individuals with opportunities and conditions for free competition. Only on this basis can individuals have the possibility of equal competition, and only then can they not complain and hate society in the event of failure. The premise for all of this is still that the country is independent of social interests and has a responsibility for national power and borders. A clear definition of the boundary involves a fundamental issue in China's current economic structure: ownership superstition. Breaking this superstition has become the top issue in deepening reform and purifying national motivation. In the process of market-oriented reform in China, the relationship between state-owned assets and private assets does indeed reflect the trend of returning from abroad and advancing with the people. However, national retreat does not necessarily equate to democratic progress, and the weight of the two is not a trade-off in the adjustment process. In fact, the current situation is that state-owned assets are constantly strengthening and consolidating, while private assets are constantly being sacrificed and hovering on the edge. Although the 12th National Congress began to put forward common ownership as the main body and other forms of ownership as beneficial supplements, the th National Congress put forward common ownership as the main body and a variety of economic sectors developed together for a long time. The th National Congress determined common ownership as the core and non-public economy as an important part of the become stories, that is, who can tell stories, whose stories are more credible, and who has more wealth. At present, investment banks seem to be the king of stories. Whether it's internationally renowned Goldman Sachs, Morgan Stanley, or China's struggling private equity funds, they are all passionate about telling stories, ranging from building friendships with the president and prime minister to hyping up rumors about the chairman of a listed company. The purpose of hype is nothing more than to increase their equivalent. The financial civilization does not exist independently of other civilizations, but is linked to the first three civilizations. For example, agricultural listed companies graft financial civilization onto agricultural civilization, amplifying the achievements of agricultural civilization several times or tens of times through a financial civilization. technology-based venture capital funds graft financial civilization onto industrial and information civilization, greatly improving the efficiency of industrial and information civilization. At present, the most successful grafting is still in investment (NKS), including popular IDG technology venture capital funds, VC venture capital, PE private equity investment, etc. Each of the four economic civilizations has its own differences. The older the era, the more complete its knowledge system is. However, at the same time, its knowledge is the efficacy also accelerates the decline. The characteristics of different economic civilizations vary greatly, and the corresponding knowledge systems have significant differences. Judging the development trend of the next civilization based on the knowledge laws of the previous civilization is similar to the Battle of Guangdong and Qiyingqing. At present, the society is generally unaware of the arrival of financial civilization. The financial crisis has not yet bottomed out, but no one mentions currency wars anymore, as they are considered war dollars in the book. The murderous and behind-the-scenes Wall Street tycoons died before they got out, while most of the survivors sold themselves to the government, were denationalized, and even did transsexual surgery to return to the bank to survive. The expected market of painful shearing by the crisis did not happen, which made people obsessed with explaining the financial crisis with conspiracy theory very frustrated. Did investment banks die of mass suicide? Just as currency war itself is a specious rumor strung together with bizarre conspiracies, even such a book is rumored to be a copycat version because the original version comes from the United States. However, the views in the book perfectly match the needs of those who have suffered heavy losses due to misjudgment of the situation, as dressing themselves as victims of uncertainty is more likely to gain sympathy. Therefore, as soon as this book was published, it was highly sought after and appeared at high-level financial seminars, serving as a shield against pressure. However, with the passage of time, the currency war has no effect on the overall situation, and it is still not eloquent enough to be used for casual conversation after meals. The essence of the financial crisis is money surplus, but in the conspiracy theory, money can be controlled unilaterally and completely. The six major families behind the U.S. government and the Federal Reserve control the situation, using cunning tactics to influence currency flows and earn large amounts of money, in order to achieve their goals by killing people and de-Buddha. However, the most fatal flaw of this logic is that the government and the six major families do not have the control they expected. They may have controlled the currency within the banking system. Once the currency flows out, it is not only difficult to track but also repeatedly transforms into capital and hot money. What is even more terrifying is that during this process the scale of the currency continues to expand. The expansion ability continues to improve, and speculative models are extensively replicated, creating a vast amount of money, book as assets or liabilities registered on the balance sheets of financial institutions are in reality dependent on the price of resources and assets. The contradiction between the leveraged expansion of monetary capital and the limitation of the price rise of assets and resources will automatically close positions under the law of value. Obviously, this is the original sin of self-expansion and self-evaporation in finance. So on the one hand, the runaway of currency falsify the possibility of a holistic and long-term monetary conspiracy. On the other hand, the automatic liquidation of currency has falsified the possibility of a century-long and shocking conspiracy. Of course, it is not ruled out.